Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. Might be a little bit more than a quick look. I'm going to take a look at the euro versus US dollar. Sort of revisited the charts and have a different view, especially as we move toward the election. So let's get started. If we look at the 4-hour chart over the last few weeks, we've seen some down price action and then a rotation back up toward whence we came. And then a move to the downside right through here, move higher, move down, move higher, move down. And now we're trying to move back higher again. If I were to put a red box around this area, this would be a range that perhaps the market is settling in ahead of the U.S. election next week. And also the Federal Reserve rate decision, not to mention lots of key earnings and other releases, including PCE at the end of the week and U.S. jobs report at the end of the week as well. But overall, obviously the big event is going to be the U.S. election next week, and that's going to have an impact on things like the deficit on the dollar, on interest rates. A Trump victory likely leads to higher interest rates as I keep the dollar run to the upside going. What does that do to the Federal Reserve going forward? All those things have to be figured out in the market. But from the technical perspective, we get clues from the price action. And so that's what I'm going to be focusing on. Now, on the downside, this area right through here, this yellow area, is a lot stronger than what I expected. I guess the level corresponds with the number of different swing lows and swing highs going back in time. And you can see here, just outlining all these levels right through here, where this all came from. It started basically right here where the price moved higher. We came back down toward this area right through here, tried to stay below, could not do it initially, up and down, then tried to hold the ceiling through here over this. This is again the 4-hour chart, so this is a number of weeks here where the price tried to bang to the downside, forming this triple bottom down through here before moving to the upside and extending all the way up to this level right here. We came right back down toward that level right through here before moving to the upside. So you can see the importance of the level, and I'm not surprised that in trading last week and this week, the price has found support buyers against this level, including earlier today, where buyers came in and pushed the price back up toward the 108.10 type level on the top side. Now, looking at this higher level right through here, this level is defined by a few things. One is this green line. This green line represents a 200-day moving average, and we fell below it here and then used that level as resistance right through here. We also now have the 100-bar moving average on the 4-hour chart coming in here right at the 200-day moving average, so that's also key. And you can also put a horizontal line that cuts across right through here where we had swing lows right through here, trying to hold support, then ceiling through here, then broke above it, used that level as a floor, and came back down toward that level through here and used that level as a ceiling. So there's a lot of stuff right here. There's a lot of stuff down here, and in between, we may have this 108.10-ish type area as well. If I put a horizontal line here, you can sort of see its importance in the short term. We had support here, we had support here, we fell below that level, used the level as resistance here, and then support here. And in trading this week we've traded above it and then back below it, and now we're back toward it today at 108.10. So high, extreme, low, extreme, mid level right through here. Let the market decide which way it wants to go using those levels. So going forward, that's what we're going to do. We're going to look for a break of the 108 to 107.609. If we get below that level, then we could head down toward this triple bottom right through here. If we move above the 200-day moving average, 100-bar moving average, 50% retracement, 100-day moving average, become the targets up here for further momentum with the falling 200-bar moving average on the 4-hour chart coming down there. In between, up and down, up and down. Of course, we have a lot of stuff going on this week, including the U.S. jobs report. We have the PCE data as well at the end of the week, and then we get into the election, which is going to be key come next Tuesday, followed by the Federal Reserve on Thursday of next week. So lots of stuff going on, but this red box right here seems to be the defining levels for traders, not only today, but going forward as well. So that's I take a more detailed look at the euro versus US dollar. My name is Greg McCloskey. Good fortune to trading. Bye-bye now.